Welcome. Today we're diving into the world of death crossover stocks, a technical pattern that has caught the attention of traders and investors alike. If you've ever wondered how traders spot potential downturns in the market or identify when a stock's momentum is shifting, the death crossover is a key concept to understand. In this video, we'll break down what death crossover stocks are, why they matter, and how you can use this pattern to make more informed trading decisions. Let's get started by exploring the basics of this intriguing technical signal. A death crossover occurs when a stock's short-term moving average, such as the 50-day EMA, crosses below its long-term moving average, like the 100-day EMA. This crossover is more than just a line on a chart, it's a signal that the stock's recent momentum is weakening. For many traders, this pattern is a warning sign that the stock could be entering a bearish phase where prices may continue to fall. Understanding this definition is the first step to recognizing how powerful technical analysis can be in navigating the stock market. Traders closely monitor death crossover patterns because they often signal a shift in market sentiment. When the short-term moving average dips below the long-term average, it suggests that recent price action is losing strength. This can be a crucial indicator for those looking to anticipate trend reversals or avoid potential losses. By paying attention to these crossovers, traders can better time their entries and exits, making their strategies more effective in volatile markets. The death crossover relies on comparing two key moving averages: the short-term, like the 50-day EMA, and the long-term, such as the 100-day EMA. The short-term average reacts quickly to recent price changes, while the long-term average smooths out fluctuations over a longer period. When the short-term average falls below the long-term, it's a clear sign that recent momentum is fading, and a new trend may be emerging. This interplay between averages is at the heart of the death crossover pattern. When a death crossover occurs, it often signals the start of bearish momentum. This means that sellers are gaining control and the stock's price may face downward pressure. For traders, recognizing this shift early can be the difference between protecting profits and suffering losses. The death crossover doesn't guarantee a price drop, but it does highlight a weakening trend that deserves attention. A key insight from death crossover stocks is the shift in market sentiment. When the short-term average crosses below the long-term, it often reflects a change from optimism to caution or even pessimism among investors. This sentiment shift can lead to increased selling and further price declines, making it a valuable signal for those tracking market psychology. One of the main reasons traders use death crossover patterns is to spot trend reversals. When a stock has been rising and the short-term average suddenly dips below the long-term, it's a warning that the bullish trend may be ending. This early signal helps traders adjust their strategies, either by reducing exposure or preparing for potential declines. Technical analysis is the study of price patterns and trends using charts and indicators. The death crossover is a classic example of a technical pattern that can provide actionable insights. By learning to read these signals, traders can make more informed decisions, even in fast-moving markets. Understanding the basics of technical analysis is essential for anyone looking to use the death crossover effectively. To confirm a death crossover, traders often use the filter where the 100-day EMA is greater than the 50-day EMA. This ensures that the long-term trend is now stronger than the short-term, validating the bearish momentum. It's a simple yet effective way to make sure the crossover is meaningful and not just a temporary fluctuation. Another important filter is checking that before the crossover, the 50-day EMA was above the 100-day EMA. This confirms that the trend has recently shifted from bullish to bearish, making the death crossover more relevant for current analysis. It helps traders focus on stocks where the momentum change is fresh and actionable. The death crossover acts as a momentum shift indicator. When the short-term average crosses below the long-term, it's a clear sign that the stock's upward momentum is fading. This indicator is widely used by traders to spot when a stock is losing strength and may be at risk of further declines. Death crossover stocks are often linked to bearish sentiment in the market. When traders see this pattern, they interpret it as a sign that the stock's price trend is turning negative. This can lead to increased selling and a self-fulfilling prophecy where the bearish outlook drives prices even lower. Spotting a death crossover can be the first sign of a trend reversal. When a stock has been in an uptrend and suddenly the short-term average dips below the long-term, it's a signal that the bullish phase may be ending. Traders use this information to adjust their positions and prepare for possible downturns. By tracking death crossover stocks, traders can monitor market risk more effectively. These patterns highlight stocks that may be under increased selling pressure, allowing traders to manage their portfolios with greater caution. It's a proactive way to stay ahead of potential market corrections. The death crossover is a valuable technical pattern that provides insights into both individual stocks and the broader market. By analyzing these crossovers, traders can determine if a stock's movement aligns with overall market trends or if it's showing unique behavior. This analysis is crucial for making informed trading decisions. Spotting a death crossover on a chart is straightforward. Look for the point where the short-term moving average line crosses below the long-term moving average line. This intersection is the signal traders are watching for. Many charting platforms allow you to overlay these averages for easy identification. While the death crossover signals bearish momentum, the golden crossover is its bullish counterpart. In a golden crossover, the short-term average crosses above the long-term, indicating renewed upward momentum. Understanding both patterns helps traders navigate different market conditions and adjust their strategies accordingly. The most common timeframes for death crossovers are the 50-day and 100-day EMAs, but traders may also use other periods depending on their strategy. Shorter timeframes can provide quicker signals, while longer ones offer more reliable trends. Choosing the right timeframe depends on your trading goals and risk tolerance. While death crossovers are useful, they're not foolproof. Sometimes, the crossover can be a false signal, especially in choppy or sideways markets. It's important to use other indicators and analysis methods to confirm the trend before making trading decisions. Relying solely on crossovers can lead to missed opportunities or unnecessary losses. To improve accuracy, traders often combine death crossover signals with other technical indicators, such as volume, RSI, or MACD. These additional tools help confirm whether the crossover truly signals a trend change or if it's just noise. Using a multi-indicator approach leads to more robust trading strategies. Let's look at a hypothetical example. Imagine a stock that's been trending upward with its 50-day EMA above the 100-day EMA. Suddenly, the price drops and the 50-day EMA crosses below the 100-day EMA. This death crossover signals a potential reversal, prompting traders to reassess their positions and consider risk management strategies. Visualizing the death crossover on a chart can make the concept clearer. The short-term moving average line, usually in a different color, crosses below the long-term line. This intersection is often marked or highlighted by charting tools, making it easy for traders to spot and act on the signal. Let's break down the schematic of a death crossover. Imagine a price chart with two moving average lines, the 50-day EMA and the 100-day EMA. As the stock's price declines, the 50-day EMA, which reacts more quickly, starts to slope downward and eventually crosses below the slower-moving 100-day EMA. This crossover point is the technical signal traders watch for, confirming a shift from bullish to bearish momentum. The schematic helps visualize how the crossover forms and why it's significant for market analysis. Once you spot a death crossover, interpreting the signal is crucial. It doesn't always mean an immediate price drop, but it does suggest that the stock's momentum is weakening. Traders often use this as a cue to tighten stop losses, reduce positions, or look for confirmation from other indicators before making big moves. Effective risk management is essential when trading death crossover stocks. This might include setting TUTA stop-loss orders, diversifying your portfolio, or reducing exposure to stocks showing bearish signals. By managing risk proactively, traders can protect their capital and avoid large losses during market downturns. In volatile markets, death crossovers can occur more frequently, sometimes leading to false signals. It's important to be cautious and not react to every crossover without additional confirmation. Volatility can exaggerate price swings, so combining crossovers with other analysis tools is especially important during these times. Death crossovers can sometimes precede broader market corrections. When multiple stocks show this pattern, it may signal a shift in the overall market trend. Traders watch for clusters of death crossovers as an early warning of potential downturns, helping them prepare for larger market moves. While powerful, the death crossover should not be used in isolation. It's best combined with other forms of analysis, such as fundamental research or sentiment indicators. This holistic approach ensures that trading decisions are based on a complete picture, reducing the risk of acting on misleading signals. The death crossover is a technical analysis concept where a stock's short-term moving average crosses below its long-term moving average, signaling a potential shift from bullish to bearish momentum. It's widely used by traders to identify trend reversals and manage risk in their portfolios. Understanding this concept is key to navigating changing market conditions. To wrap up, death crossover stocks offer valuable insights into market momentum and trend reversals. By understanding how to identify and interpret these patterns, traders can make smarter decisions and better manage risk. Remember, while the death crossover is a powerful tool, it's most effective when used alongside other analysis methods. Stay informed, stay cautious, and use technical patterns like the death crossover to your advantage in the ever-changing world of trading.